Finance. As always, I am your host, Joshua David, and we are talking a lot about some new terms and concepts about the financial markets, benefiting in up markets, but also something that a lot of people may not know about, the potential to benefit in down markets as well. If you happen to miss 2 tickets for the investing class, call 952-814-4410. I also like to make it easy for our listeners. You can text the word invest to the number 484848. You're going to receive a link back. Make sure to click the link, pick a date for the investing class. When you come in, you're going to get that financial quick start kit, which will help you get started right away. Now, you have just great intros, I should say outros to every segment about what we're going to talk about next. And I think we had a lot of listeners say, I'm going to sit in the car in the garage and I got to wait to find out what the heck is mirror investing.
Yeah.
Let's talk about that.
Right.
What do you mean by your best tool being a mirror in your investment strategies?
Well, I think it's a fairy tale. I think it was Snow White, wasn't it? Where she looked in the mirror and went, mirror, mirror on the wall. It was a witch or something. Anyways,
something
it was
like that.
Mirror, mirror on the wall, who's the fairest of them all. You can't look in a mirror and all of a sudden have something come up, say, here's what you need to do. This is what I mean by that. Look in a mirror. And what you're going to see is the person that's responsible for where you end up. You can give your money to somebody. You can give them the authority to manage it, but not the responsibility for where it ends up. So number one, learn that you have to take responsibility because you are responsible. When you retire, if you don't have the money that you thought you were going to have based on what your advisor said, they're not going to make up the difference. And then also when you're looking in the mirror, you are looking at the only person who truly every day cares about your money, not theirs. Do you think a broker or advisor is more concerned about their pocketbook or your pocketbook?
But hey, what if they're nice gals or nice guys?
Well, we hear that all the time, and they should be nice because you're giving them a lot of money and you're filling their bank account. And it's interesting. I bet you most Wall Street firms, when they're hiring somebody, one of the first things they look for is personality because they understand that that's kind of a relationship thing. But we've had people that come in and say, look, even though after inflation I'm only getting 1 or 2% returns, my spouse really likes our advisor and they want to continue with that. But still you're responsible. You can't look at how nice somebody is and that turns into you're living a great retirement. And then also when you're looking in the mirror, look at how educated that person is, because unless you're educated and you have access to the proper knowledge, proper skill building, proper support, guidance, and the proper tools, you're looking at your own worst enemy. It's your choice. You're the one that can make the change if you want to, but understand that you have to take the first step. And the proper knowledge, the proper financial education is out there for you to get, whether you are looking for short-term income or whether your goals are more long-term. When you're in retirement, you may think, well, okay, now I don't have to do anything. I've got this big retirement account I can rely on. That's the time that you should really be able to put into practice the income producing strategies that you've learned while you're accumulating assets. Because when you retire, instead of just drawing down whatever that pile of money is every time you pay a bill or you want to go on a trip or whatever that money is for, instead of drawing it down, why not look at that retirement account bunch or pile of money as an income generating vehicle? Learn to use the short-term vehicles we're talking about. Not only can you have that kind of an income replacement for the job income you used to have, but also the assets that we're talking about, the futures market, the foreign exchange market, the options market, those can be used as the income generating vehicles, but they also have leverage. So instead of having to take a large amount of money to control a large investment with the leveraged assets, you basically have a down payment on an investment. So a smaller amount of money can actually control an investment many, many times. It could be 10 times, 20 times, 50 times, or 100 times more than what you have put into kind of the down payment. It gives you the opportunity, a lot of people that maybe don't have a lot of money to catch up. It also allows people that have a lot of money but are very protective of that money to still participate, but using just small parts of it.
Yeah, the great thing about that is to have the potential to do that when you use the right assets. You capitalize or maximize the efficiency of your capital. So that way you use these other assets based on the account size that you have to have that potential. And Alan, when you're getting into these different assets like futures and Forex, they are open 24 hours a day. So you dictate basically
Right.
when you decide to trade and invest. I always tell people, it doesn't matter when you do it or how long you do it, as long as you're consistent. Be consistent, because that's how you're going to build those skills and strategies. And Al was talking about earlier about who is going to be the best steward of your money. It's going to be you. So
Sure.
that's why we're seeing more and more people come to Online Trading Academy, because they understand, okay, I'm just you're just giving your money to a broker and advisor with the hopes that they buy the right funds for you. Think about this: you're buying funds, paying a fee to do that, but also paying them a fee just to hold your money, where you can do that yourself because you have self-directed opportunities. If you want to learn more about those different, techniques that the professionals use, or self-directing opportunities, Al teaches investing classes here on Bloomington. I'm going to give away 20 tickets to. They're physical classes. They're free. They're 2 hours. And we're actually right next to the Mall of America, so easy to get to from 494. So call 952-814-4410 or text the word invest to the number 484848. You're going to receive a text back. There's going to be a link in that text. Click the link and pick a date for the free investing class. When you come in, you're going to get that financial quick start kit, and that's going to help you get started right away. So let's talk about what you're alluding to with these self-directing opportunities. Now, you have most investors, I guess most novice investors, that just buy either funds, stocks, or bonds. What are some of the other opportunities or perks do you have when you self-direct your IRA, or maybe your 401k? Say you have a self-directed 401k as well.
Sure. Well, most people go to what they know, and what they know is what they have been exposed to, maybe by somebody who needs you to do something so they can benefit from what you do. What we're talking about is, again, it becomes kind of a competition. A trade or investment, there's a buyer and there's a seller. Somebody's going to come out on top, and you want to make sure that you are being positioned with the person that comes out on top. It's almost always the big players, the elephants that are out there. But one of the things that you have been conditioned to believe, and I would say that probably 90% of the people out there believe this, and that is that this 401k is the great thing that is going to carry you through retirement. Put as much money as you can into it. It's a great thing. You don't have to worry about it. It's going to do well. Don't worry about corrections or crashes. It's always market's always going to come back.
That almost sounds silly, Al. When you actually think about it and hear that,
Yeah,
it sounds silly, but people do it.
They do it, and we have people that come in and say, I put some money in the market in the year 2000, and I listened to my advisor. I held on through the two big drawdowns, and I'm up now. I have a profit. Sure you do, but it's probably a fraction of the profit you could have had if you didn't ride those markets down. And then we have a lot of people that come in that were in the market in 2007 and felt they were in great shape, and then 57, 60% or more of what they had put away for retirement was taken away between the end of 2007 and the beginning of 2009. Well, especially if you're drawing money out, if you retired then, that can be devastating. So there are things that you can do. You can set up something outside of your 401k. If you're retired, you can take that 401k money, you can roll it into an IRA, a self-directed IRA, where number one, you've eliminated fees. Fees are like, if you look at your retirement money as a bucket, it's like somebody took a big drill, and drilled a hole in the bottom of the bucket, and then money is falling out on a regular basis. Those are fees that take away from what you could have in retirement. There's the negative impounding or compounding impact. Positive compounding is where every dollar maybe generates or creates thousands of additional dollars. Well, if that dollar is taken away from you, there's thousands or tens of thousands of dollars that you don't have. Fees can impact you maybe to the point where 50% or more of what you could have in retirement is taken away. You eliminate the fees with a self-directed IRA. You also have access to the assets we're talking about, the futures, Forex, options market, where you can participate with smaller amounts, but you also can participate in a downward moving market. And anybody who is probably 40, 50 years old, you can count on the fact that you're going to go through maybe 2 or 3 bear markets before you end up being retired. And the most important thing, if nothing else, is to protect what you have. How do you do that? Well, here in these classes, we talk about an insurance policy you can have on your portfolio. How great would it be if the market is crashing or correcting and you don't really care about it because you have this policy and it's an asset that we teach you about that goes up in value to kind of counter that downward movement? What if you have insurance on your house, but you don't know for sure your house is going to burn or there's going to be a flood, yet you have insurance on it? What if you had a neighbor whose house was built on a floodplain and had 3 or 4 kids that were pyromaniacs? What if you could have an insurance policy on that house? You can do that in the markets. You can have an insurance policy, so to speak, on assets you don't even own.
Yeah.
So there are a number of things that you just haven't been exposed to that we cover in these classes.
Yep, and kind of paint a picture on that as well from the 2000 crash when that started in 2000 and now the market is up about 190% roughly.
Yep.
But you take 21 years in that, that's the overall average. What they always say, 8% per year is supposed to be good. Well, that's just the average. Take fees out of that, right? Say that drops you down, let's just say 2%, right? Take inflation out of there.
Correct.
Inflation is skyrocketing right now. So your buying power is getting less and less over that time. But that's why you need to understand these down markets, how to participate in down markets, protecting what you have, and then continuing to have the potential to grow no matter which way these markets go. And if you want to learn more about multi-directional investing, whether in your 401ks or your IRAs, Al teaches investing classes, and he talks about how to potentially minimize your fees or improve your overall investing performance. So these techniques and strategies, they are available to us. So callers 1 through 10, when you call in right now, you can receive 2 tickets for an investing class right here in Bloomington. They're free. Al teaches these. So you can receive that plus the financial quick start kit when you attend. Call 952-814-4410. And it's really all about sleeping better at night, knowing you're protected. You can text the word invest to the number 484848. Click the link that you're going to get back. Pick a date for the investing class. You're going to receive that quick start kit when you attend. Al, take us home to the home stretch.
Well, let's talk, or let's look at the fourth section here as being a melting pot. Could be we got a lot of things that we started talking about that we haven't finished. So we're going to combine a bunch of things here and take it home.
The overall investing decisions and investment strategies, we're going to continue that discussion coming up next. Once again, for 2 tickets, 952-814-4410. You can also text the word invest to the number 484848. You'll receive a link back for 2 tickets and that quick start kit.